Hey everyone, welcome back. Hope you're having a fantastic day so far. So next week, certain Social Security recipients will be receiving their second check this month. Plus, what is the latest on no tax on Social Security? Is this something that Trump can accomplish by the end of this year? In today's video, we are going to be covering everything that you need to know. But before we go ahead and dive into for today, if you would like to receive up to $200 in free stock or $200 in free cash, in a pinned comment below, I will be leaving a link to Robinhood. All you have to do is once you click on that link is just sign up for a free account and then simply link your bank account. You do not even have to make an opening deposit. At that point in time, Robinhood will be sending you one free stock worth all the way up to $200. And if you'd rather just have the cash, all you have to do is once you receive the free stock is just sell it for what it's worth and then transfer the cash value right back to your bank account. Okay, so diving right into for today. So what is the latest on no tax for all Social Security benefits taken in? Well, whenever Trump was running, whenever he was campaigning for office, that was one of his key promises. He promised no tax on tips. He promised no tax on overtime. And finally, he also promised no tax on Social Security. Well, in his One Big Beautiful Bill Act, he did make it so more and more Social Security beneficiaries did not have to pay taxes on their benefits because of the increased standard deduction of $6,000 for individuals and $12,000 for couples, double that. However, there are still some people who will have to pay some sort of taxes on their benefits this year because there is still going to be a tax on Social Security, and the tax bracket, unfortunately, for Social Security has not been updated for a very long time. So what is the latest? We're going to go ahead and dive into this article here by The Motley Fool. They ask, what's the truth about taxes on Social Security benefits? So when campaigning for president, Donald Trump pledged that he would eliminate taxes on Social Security. The White House has declared victory on the issue with a press release in July indicating that no tax on Social Security is a reality in the One Big Beautiful Bill. But is that the case? Did taxes on Social Security benefits really disappear, or is there more to the story? Now, the first and most important thing that you need to know is that taxes on Social Security benefits have not disappeared. In fact, the rules remain entirely unchanged. Under the current rules, your provisional income determines whether you are taxed on your Social Security benefits. Provisional income is half of your Social Security benefit plus certain other non-taxable income like MUNI bonds plus all taxable income if your provisional income is as the following. So above $25,000 as a single father or above $32,000 as a married joint father, you will be taxed on up to 50% of your benefits, and then above $34,000 as a single tax father or above $44,000 as a married joint father. In that case, you will be taxed on up to 85% of your benefits. Now, this was the rule before the Big Beautiful Bill, and it remains the rule after the tax changes made in the Big Beautiful Bill. Once you hit these thresholds, you would be required to pay federal income tax on a portion of your benefits. Now, this does not mean that BBB didn't change anything though. Instead, it created a new tax deduction, as I just mentioned, for seniors. So in the 2025 through 2028 tax year, so this is only temporary for the next 4 years, individuals 65 and over are allowed to claim an additional $6,000 deduction per individual or $12,000 total per married couple. The deduction phases out once you have a modified adjusted gross income of $75,000 as a single father or $150,000 as a married joint father. But if you are below these thresholds, you add the extra $6,000 or $12,000 to your existing standard deduction. And so with the new deduction, taxable income goes down. And House Ways and Means Committee Chairman Jason Smith has explained that this will result in no taxation of benefits for right around 90% of seniors. So previously we had right around 50%, right around half of all Social Security beneficiaries paying some tax on their benefits, but with this additional deduction of $6,000 for individuals and double that at $12,000 for married couples, that increases that up to 90% of Social Security beneficiaries, 90% of seniors no longer paying any taxes on their benefits. Of course, we still have right around 10% of very high earning Social Security beneficiaries still paying some sort of taxes on their benefits. So of course, what they could do is they could eliminate all that together by passing a bill through Congress, something that Republicans and Democrats would have to get on board with. Now they go on here to say that since the tax deduction is available to all seniors, in a way, it provides broader tax relief than just eliminating taxes on Social Security. Since anyone 65 and over can claim it, deductions reduce your taxable income rather than providing a $1 to $2 reduction on your tax bill, as a credit would do. If you previously had $60,000 in taxable income as a married couple after claiming all your other deductions, and you both claim this $6,000, you'll then reduce your $60,000 income down further to just $48,000 per year. So it is very possible that you might still owe some taxes at the federal level on Social Security, as this extra standard deduction did not completely eliminate taxes at the federal level on your Social Security benefit. But this happens to be something that is bipartisan. We have bills in DC right now, both by Democrats as well as Republicans, that would in fact eliminate altogether taxes on Social Security benefits. The way that they would do this, though, would be a little bit different. So what Democrats want to do is they want to eliminate taxes at the federal level for all Social Security benefits, but in return, they also want to raise taxes on those earning above $250,000 per year. Because this year, for example, you only pay taxes on FICA, your FICA taxes through Social Security, the 6.2 to 12.4% on the first $176,100 you earn. So someone who earns $1 million per year is going to pay the exact same amount of FICA taxes towards Social Security as someone earning $176,100. What Democrats want to do is they want to lift that cap, so anyone earning above $250,000, that extra income all the way up to whatever they earn, would be taxed at the 6.2 to 12.4% FICA Social Security rate. They would be bringing more money into the trust fund and also making it solvent for a longer period of time. Now, the Republican plan is a little bit different. They would eliminate taxes on Social Security, yes, but there would be nothing to offset that. They would not be raising taxes on any other Americans. So you can see up on the screen here, we have the bill by the Democrats here. This is Representative Angie Craig. Her bill is called the You Earned It, You Keep It Act. And once again, the bill would be paid for by raising the cap on the Social Security payroll tax, so higher earning Americans continue paying into Social Security, whereas Representative Thomas Massie, who is a Republican, his bill, called the Senior Citizens Tax Elimination Act, would do just that. It would eliminate taxes at the federal level on Social Security, but he would not in return raise taxes on anyone else to offset that. So Democrats and Republicans have a little bit different of an idea. So whether or not they can actually pass a bill and make Trump's campaign promise come true by the end of this year is really up in the air. They would just have a couple more months left to make Trump's campaign promise come true. Now, in some other news, of course, next week, certain Social Security recipients will be receiving their second check this month. So it's a little bit different. Sometimes this happens. It happens about 3 or 4, sometimes 5 times per year. It's just based on a scheduling quirk. And therefore, these same recipients will not receive any check whatsoever in the month of November. But then they're going to receive 2 more checks in the month of December. So according to Fox News, the Social Security Administration ordinarily disperses payments for supplemental security income on the first of a given month. The SSI program provides monthly payments to eligible older adults who have little or no income, as well as to disabled individuals, which is different from Social Security's standard retirement benefits. When the first of the month falls on a weekend or a federal holiday, SSI payments for that month are made on the last business day of the preceding month to ensure that beneficiaries have received their funds before the new month begins and they face potential expenses. So due to the way the 2025 calendar falls, 2 SSI payments will go out in the month of October. One payment already went out on October 1st for October's benefits, and then the second one is going to be going out next week on Friday, October 31st. That is going to be Halloween. That is actually going to be your November 1st check coming out a little bit early because, of course, November 1st falls on a weekend. And whenever the first of a month falls on a weekend or a holiday, you just end up receiving your check a little bit early. So you can see up on the screen there, because you're going to be receiving 2 checks this month in October, with your October 31st payment actually being November 1st's payment. You're going to be receiving no check whatsoever in the month of November. But once again, as you can see up on the screen, in the month of December, you're once again going to be receiving 2 checks in the month of December. You're going to be receiving your first check on December 1st and your second check on December 31st. That, of course, is because January 1st, even though it is not a weekend, it is considered a federal holiday. So you're going to be receiving your January check a little bit early on December 31st. But that's all we have for today's video. As usual, leave your thoughts and comments below. I would definitely love to read them. But that's all we have for today's video, and I will see you in the next one.